we begin by tracking the flows. More big inflows for U.S. equity ETFs in the first half of the year, with a net gain of $219 billion and just over $3.8 trillion in total equity ETF assets. That now bumps up the overall ETF market to just north of $6.5 trillion. There is no question the growth trade came roaring back in June. Big tech and the Invesco QQQ Trust leading that charge, with the value-oriented plays like financials and inflation trades like gold kind of taking a back seat. But is this a trend that will last? Joining us now, Dave Nadig. He's the Director of Research at ETF Trends, along with Jay Rames, CEO of Reeves Asset Management. Gentlemen, thank you for both being here.
Hello. Thanks for having me.
Hello, we got you there. All right, so Dave, we're going to kick things off with you, if you don't mind. Give us your sense of what to expect in the second half. How will the looming threat of inflation play into the whole value versus growth dynamic?
Well, we have actually seen a pretty strong run for value flows over the last 4, 5, 6 months. So investors are clearly looking for those opportunities. I don't think we've seen the small cap rotation a lot of people are talking about, but I do think value is back, and we see continued interest in things like dividend plays. And I think that shows investors really hunting for income, right? We've seen a lot of interest in fixed income that solves problems, like, for instance, TIPS, which obviously can help you with some of the inflation side of the coin, or munis, which can help you with some of the tax issues that I think a lot of investors and advisors are really worried about going into the second half of this first year in a Biden administration. So I think we're seeing a lot of tactical usage of really interesting ETFs. But meanwhile, as you pointed out, the flows are really unstoppable. It's been Katie bar the door for everybody. We've seen huge uptick from retail investors, from financial advisors, and from institutions.